All right, let's get started today on divergence, and you don't want to miss this lesson because this is the number one way I get into trades, get out of trades, find the bottoms, and find the tops. Divergence is the hidden key to really everything trading the stock market. So let's not waste your time. Let's get into it. This is Market Move's second channel. So again, subscribe, like this video so we can get this content out to everybody. But divergence, if you don't know, is just using an indicator. Down here is my market mover indicator. This is one that I personally made. All the traders inside my trading group get access to it. All you have to do is pass the free trial and then message me and then you can get it. So that indicator is what we're using today to show you the examples of finding divergence. And we're going to be going over AMC to show you how you could plan the tops and the bottoms and rode all the waves on AMC, because this is a perfect example of this stock and showing divergence. So first off, there's a couple types of divergences. There's hidden, and then there's just regular divergence. And I'm going to show you what those look like, and we're going to go through both examples. But here's a great chart that shows regular. Regular is the one I personally look at. I don't really trade hidden, but I will start to look at it more now that I'm teaching it here. So when I make a video, I learn something too. I become more familiar, and then I start using it in my trading and then in my trading group with my traders. So regular is number one. It's my favorite way to know the tops and bottoms. So if the market's going up and we have a high in the market, a higher high, and the indicator's going down, we have a lower high. Indicators do go up when the market goes up, and that validates the move. If indicators don't go up when the market goes up, it does not validate the move. So this is called divergence, and this is the core way of knowing when to take profits and when to get in on for reversals if it was going up. So bearish is when the market's going up and the indicator is not. That one's going down. You can use any indicator, RSI, MACDs, all the popular ones. And then bullish divergence is where the market's going down, making a lower low. The indicator's going higher though, making a higher low. So higher low shows us they couldn't push the internals down. So the internals are measured on the indicator. And this could be like a moving average or something. I don't know what's calculated, but for some reason the indicator doesn't go with the market. And we know that the strength is not there. So this tells us the strength is not there for continuation. And we're going to see a reversal relatively soon. But timing the market, timing the bottom is impossible. This is the one way to kind of give yourself an edge. But again, timing bottoms is a great way to lose money. So let's talk about hidden divergence. And this is where the market makes a high and makes a lower high, and then the indicator makes a higher high. So it's the opposite of the above example. So this would mean the indicator had a push for the bulls and the market didn't show it. Like the indicator was strong, but the market wasn't. So we know there's some divergence there too. So hidden divergence when the indicator goes higher and the market doesn't, or when the indicator goes lower and the market doesn't. I'm going to try to find examples of this one, but I don't see it often and I don't trade it often, but we're going to try our best. And this one, my favorite right here, it says double tops in the stock market. And then you see here, we have a lower high. So same thing as above, but it's a double top instead of a higher high. So market tries to bust through, makes a lower high on the indicator. We know there's weakness. Same thing, double bottom here. Market has the indicator going higher, higher low, couldn't make a new low. We know that's bullish. So this is bullish, this is bearish. And we can go through this column and just try to find all the examples in front of you guys. So AMC right here, we have my indicator, we have AMC, we're ready to go. So strap in your learning tools and notes and get ready for this. So any indicator, are you swing trading? Are you day trading? Are you scalping? Should you be on the 5, 10, 30 day chart? That's the one where you want to start out with. So if you are holding something for more than one day, you should probably be looking on the daily chart and then the time frame 2 below that and 2 above it. So here, if I'm holding something for one day, I can look at the daily chart. If I am doing that, I can scale down 2 time frames, maybe 3, and use this to find divergence. So the 3-hour and the weekly. Obviously the weekly won't show it because it's higher, but it shows the bigger picture too. And it shows how far the indicator is going. So let's say we are on the daily. So we'll start out with the daily and we'll work our way down to like a swing trader and then a scalper. So swing trading could be, a 1-day swing or a 2-day swing. It could be a 3-hour swing. I would say that's day trading, swing trading. Then there's scalping, which is like in the 1 to 3 minute time frame. So we'll show you both. And the best indications are going to be on the higher time frames because they have the most meaning. When you see them on the higher time frames, that's when you run. So right here, AMC, and we'll just blow this indicator up slightly. You see AMC right here making a double top. So this is showing us exaggerated divergence. Look at the indicator down here, making a lower high. So right here, exact scenario, double topping, and the indicator is not making that equal top. It's making a lower top here. So we're seeing divergence on AMC. We could see a fallback on AMC to the 40s this week just because of that divergence. So there's always the case that you bust through the range and then the indicator can make the divergent reading offset. So it makes a non-exaggerated reading. So it could happen tomorrow, but the likelihood of that happening is very small. In the market, we're just trying to find the opportunities that have high likelihoods of success, and this does. For the most part, when you see this, you should probably run and hide. So here we are, another reading. So basically double topping here. I don't know how exactly you want to draw it, and the indicator just slowly falling. So that's exaggerated again. So it didn't make a higher high. It made kind of an equal high, and we just couldn't break. So the indicator showed another divergent reading right there. So let's move on and look for that. I don't think we can find any bottoming because there's so many small candles. It's really hard to see what's happening on this. But I think it'd be best to zoom in because the only other bullish reading of divergence is right here where the market makes many higher lows, and we have exaggerated bullish reading here because we're just flat. So this is like a double bottom, triple bottom situation. Indicators slowly going up, and the market finally rips. So this is AMC again. But this is just one thing that you don't want to go against. Trust me. If you're trading against the indicator and trading against divergence, you always get burned. And I personally have done that too. I've gotten burned trying to go against it. So here's an interesting one. And I don't know. This is an equal top. We'll scale down. So what I'm going to do now is scale down to what a swing trader would look at. So if you swing trade or day trade, you're probably looking at the hourly chart to the 4-hour chart. So if you're in a trade for more than 3 hours, you're probably looking at the hourly chart. So here, what we can see is the first fall on AMC from this indicator. The same exact pattern that we just saw on the daily time frame presented itself weeks back. And this, as you can see here, fell. So the indicator exaggerated bearish divergence, and then we got that breakdown for the next couple of days. So AMC looks really bad here. Just doing this video, I almost want to throw some puts on. And I do think I might do that with my trading group if I'm feeling a little risque. But we see, the high here, the lower high, and the equal high. So let's look around to see if we could see any more tops. So right here, let's say this is like a high and a high. And so you could see the indicator from here to here dropped. So that could be true bearish divergence, like regular divergence, or it could be exaggerated, but you can see the indicators falling and the market's double topping. So that would probably be exaggerated. So you can see you can do this on the larger time frame, but it gets really fun on the smaller time frame because that's where you find that first signal, because the smaller you go, the earlier the readings are. You know, you would have known AMC was bearish until like these readings dropped here and you got this double top, and that was your first bearish indication. But for the most part, like you could have got this signal probably hours earlier on the 5 minute. So we're gonna do a very, very small time frame, and then we'll go to the scalping time frame of the 1 minute or the 3 minute chart. So this one is great because AMC is making real clear divergence. You can see from here, we made those super high readings as we popped, and then as we went higher and higher and higher, the indicator went lower and lower and lower. So this told us this move was bearish. Again, we didn't get a major drop. So we're trying to wonder, hey, when do we buy into this? That's the question you're probably wondering. How do we get into this if it doesn't work out right away? So you can see here that AMC just came off this trend line. You could draw maybe a trend line. Every time it hits it, it comes off of it. But once you buy into this, the larger time frames work the best. As you can see, the smaller time frames really don't. But you do get the breakdowns in the future. So it does always break down when you see this reading. But the goal is to like scale into the position. You don't want to buy your full position on this reading here, because you do get just a slight breakdown, but it's not enough to really have a great risk to reward. So even if you got in here, you know, no breakdown really. So not a great risk to reward. And over here was probably the best place to get in. And this is the largest breakdown on the chart for AMC. So it's always about context. This was a 5-point move. And if you look at the past, if you bought into this in like 1/3 positions, you bought in here, you bought in here, and you bought in here, you would notice that this last position here, everything's profitable minus your first one. So that's why we buy in slowly when we're playing reversals. We don't buy in everything all at once because we're going to be wrong. You know, it's going to go up and continue and go against us, and it's going to be very hard to time. So that's the only downside to playing reversals. But here, how can we figure out if AMC bottomed out here? Because if we got into short position here, we could probably find out a reading that tells us AMC was going to bottom out, and we could exit our short position, go long. So this is, as you can see, making a lower low, and the market makes a lower low. So that's a clear, perfect move. So we got conviction there. We have confirmation. I really want to put on some puts as I'm looking at this, because look over here. This is probably one of the better places to play divergence is when the indicator goes up again. So it consolidates and runs again, and we just don't push over the highs previously. And you can see this on the 10-minute chart, the 15-minute chart. We just hit that sell signal on the market mover and then just clear bumps on it. So just can't break, and then falling through. So AMC are looking extremely bad here. And the 5-minute chart was just a little hard to trade. So let's move on one more time. Let's see if we could find the bottom here. So I do think we would have been able to find the bottom maybe on the 3-minute chart. So if we go to the 3-minute chart, we'll zoom in here. And I do see a double bottom situation. What does the indicator do? Does not go lower. So the indicator bottoms out. And what does the market do? The market goes lower. So on the 3-minute chart, this is your first indication that this moment here is probably the bottom on AMC for whatever trade you were in. If you got in up here, you drop, double bottom, get out, go for calls maybe, and then just run this until you see divergence. So, you know, I'd only look for divergence on the higher time frames if I'm swinging this, but you can see up here, maybe a double top, but we're starting to get that indicator to fall. So as you can see, smaller time frame just wasn't as great. If I scroll over on this one, I like the most. Let's just scroll into this one. This was the ultimate bottom for AMC in the short term. Market makes a lower low for AMC, indicator makes a higher low. So this is regular bullish divergence, and we run into the close and we gap up the very next day. So this one was really, really nice to time and would have showed you the bottom on AMC for the past week. So keep scrolling. You can see the indicator just dropping. So drop, drop, drop as the market makes these equal highs. But let's find out one more piece here. Look at this one, another perfect bottom in AMC. So we have a lower low and the indicator makes a higher low. So just using AMC, you have two opportunities where you could have timed the exact bottom on this. And that is very, very powerful as a trader because the reversals, getting in at the lowest points is obviously where you make the most money. So let's look around for this section here. This one looks very interesting. I'll zoom in. So what we see here is indicator makes a high and goes higher. So this is the top. This is a bearish divergence. So we got market going up, indicator going down, and this is a very extended reading. So extended readings tend to give us the best reversals. So this one, we never ever reverse on a dime. It usually takes time, but you can see consolidation. So we had a triangle moment in the indicator the whole time, drop, 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 dropping. So while we were chopping through here, the indicator was just not looking great. And then we got that rip lower and then that buy signal, that lower high for the bottom. So just in this 2-day period, great trading for AMC. And I just haven't seen too many hidden divergent moments. So that one I just don't see often. If I did, I'd be very excited because it's a new tool for my arsenal. But as I scroll through here, I just don't see many opportunities. Look at here. We got a hidden or exaggerated divergence, which is just like a double top situation. So double topped, indicator, slowly falling there. So I just don't see, there's a high, here's a lower high. So there's divergence on that reading. That one's very tough to find. But hopefully this tutorial helps. What I'm going to do is link the last video, which is the Bollinger Band video. And that one's one of the favorites everyone's been using. So check that out. I'll link it up right here. And I'll see you guys later. Peace.